to pause. Okay, we have Aditi Nayar of ICRA with us. Aditi, according to Ekta's poll, the expectation was that the WPI inflation will be over 5%, then it's come in at 4.9. Your thoughts, do the chances of a pause increase in Feb?
Thanks, Lata. See, we had also pegged about 5.6% is what we had forecast for the WPI for this month. So it's come in significantly lower than expected. And again, it seems to be on account of primary articles. So while the argument of core versus primary may be there, I haven't seen the internals fully for the WPI yet. But as we had spoken last week, even after the CPI data, I thought that the chances of a pause had gone up. So this is something that will reinforce that.
Yeah, you were one of the votes. I was just telling Ekta, Sonal and Mangalam, one of the persons who voted for a pause when I did that poll. But you think that we are now done with sixth quarter?
Yes.
That's the terminal rate. Okay. Now,
yes.
This WPI inflation itself, we have seen a significant fall, as you point out, 5.6. Ekta's poll was also 5.6. So the market thought like you, or you thought like the market, 70 basis points lower than what our poll threw up. Do you think this is a consistent behavior, or are we going to see some backlash? Because we already see global prices kind of rising. Manisha was telling us coal, iron ore, steel, all of them have inched up in expectation that China will demand.
So in fact, Lata, that's one of the reasons why we are not really changing, for example, our FY23 CPI inflation forecast, despite the positive surprise last week. So we're still at 6.6% instead of 6.7%.
Okay. So we could
it may be a trough and then a little bit of a reversion after that. Yeah.
Okay, that possibility exists. All right, Aditi, we will leave it at that. Thank you very much for taking our unscheduled call and giving us the benefit of your advice. So there you are. Expectation for a pause will go up. Now, we are not yet seeing it in the 10-year. This is because the 10-year is now reacting. It's at 7.31, the 10-year paper. It should have been a lot. It should be going closer to 7.2, given that we may not have a hike. This is largely because there is a fear that the government borrowing program could be high. And we are only 15 days away from that borrowing number hitting us. So the 10-year, which is a spot rate, it is understandable. It is not yet reflecting the slowness. I think we should pull up the 10-year at this point in time. I understand that we have to be showing the details of the WPI, but the 10-year bond is not falling. If you looked at the overnight index swaps, they've fallen considerably. That's a pure rate aspiration market. And there clearly you're able to see the yields falling by a good 25 basis points since pre-CPI announcement. So, yes, we are in for the likelihood of
now, there's no expectation of a huge change in the government borrowing program or the fiscal deficit number when the budget, with this budget. So
yeah,
no
the expectation is that the government has already announced that they will come down to 4.5% fiscal deficit from the 6.4%. Now, that is 200 basis points in 3 years, which means they should deliver a 60 to 70 basis points now. Will they deliver that 5.8%? And how much will they borrow from small savings? Because small savings rates are also rising. So they may impose more on the market. There are all these fears. CD rates have gone up. Banks also are chasing more money because, lending demand has gone up.
It's gone up.
There is enough pressure already from the private sector to borrow. Banks are borrowing from the corporate certificate of deposit market. Companies are borrowing from the CP market. Over and above that, if the government borrows a great deal, that pressure will be there. Until now, people were ready to be excess on their SLR because they were not having too much of corporate demand. But now you want to draw down on your excess SLR to service corporate demand. In that context, will you be able to stomach a 17.5 lakh crore fiscal deficit and probably a 16 lakh crore coming to the market itself? So, the market's fears are well founded.
Okay, well, we're taking the 22-month low in terms of the WPI and the CPI 12-month low with both hands. Thanks, Lata, for joining in and taking us through this conversation. So definitely a positive WPI figure which has come through, but the core inflation has still remained sticky. It's down on a month-on-month basis, but it's still at around 3.2% versus around 3.5% in the previous month. But overall, the headline WPI is lower because of a lower food inflation. Take a short break, but on the other side, full tilt back on the markets and stocks which are reacting to news updates. Stay tuned.